Hello, accounting students. I hope you guys had a great spring break and you're able to relax and kind of get rejuvenized for the last 8 weeks of school that we have. The next 2 weeks, we're going to be working on a kind of appendix, a special part of it is introducing special journals with different problems and stuff you're going to do. And in accounting, there's a couple different ways to do things. There's the general ledger way, which what we have been doing. And there's also the special journals. And the special journals actually has it to where you will have a special journal for accounts payable and a special one for accounts receivable. And so like all your accounts payable and accounts receivable things will go into one journal and that's it. So we're going to look a little bit at what these look like. The first thing is that you have is a sales journal. You will notice in a sales journal, some of the stuff is taken away, it's simplified it. You just have the date, what account is going to be debited, because in a sales journal, you're only going to record everything that you sold on account. So this is money that you receive later on. It's not anything that you're going to pay. So it assumes everything that's in the sales journal is actually accounts receivable. So that's where your account is debited. You just write down the name, the company's name, right in here. You write the terms down, the invoice number, and then just the amount it is. And in this area right here, it says that you're going to debit accounts receivable and you're going to credit sales. When we do our subsidiary, you're just going to put a check mark right there to post it. And then when you post down here, you're going to actually post the totals twice. One to accounts receivable, once to sales. This posting here will individually show what it is for each individual account. And that's our subsidiary ledgers. And then in our actual general ledger, we'll have these two. The next one I would like to talk about is purchases journal. Purchases is a lot like sales, but it again is when we purchase something. So when we purchase merchandise, we purchase supplies on credit. So everything here is when we purchase on credit. If we purchase it with cash, we do not put it in here. So a little bit different with this one is that we have several different things where we can actually debit instead of just one. So you're going to put the name of the company that's credited, who you owe money to. You're going to put the terms, accounts payable credit, and purchases debit. Sometimes it's not purchases, because remember, sometimes it might be equipment or it'd be supplies. And if it is equipment or supplies, then we'd actually come over here and put our account and the amount. So they must have purchased equipment from Casey Company, and it was equipment for $300. Remember, some things can be purchases, is going to be anything that you purchase that you're going to resell. Anything else that we buy an account is going to have to be in this area over here of what we are going to debit also. Post reference, you're going to go to the accounts payable ledger and you will record them, put check marks there that you recorded them. These go in the general ledger. And then this goes also in the general ledger. You do not have to post this amount on this side. These are really good slides to help you kind of understand what we're talking about. And the book has under chapter 10, it's right after chapter 10 is called the special journals. That part is actually pretty essential for you to look at too in the book. Cash receipts is the next one. This is anytime we receive cash that we have been charged on account or received cash in general. So anytime we receive cash, whether it's on account or not. A couple things to notice is we have our cash debit, the amount that we're debiting cash. We have our sales discount column. We have accounts receivable column. And then we also have a sales credit column. And then we have, if we do use the accounts receivable, we're obviously going to have to put in here what account that we actually did receive it from. So did we receive it from Balder? Did we receive it from Lewis? We can put notes in there like it's a cash sale, so that'd be a note that's in there. So this is kind of our information to be able to do. If it is something like capital, that would go in here because that's amount credited. But these here, since there's amount credited over here, we don't have anything in that column. Whoops. Cash payments is the next one. Anytime we pay cash, whether it's on account or not, this is what we use. You can see we use salary. These two were obviously cash payable accounts that we did. You have our cash payable, and then our purchases credit if it was purchases discount credit if there was a discount on it when we paid for it, and then our cash credit. We also have our general ledger, or yeah, a general journal, I should say, not ledger, for things that we've always used it for in the past. Things like sales returns and allowance needs to go in there. Purchases, returns, and allowance also needs to go into our general journal. So as you go through these, you're going to find that you will either be putting them in one of the journals. And part of it is, as the problems we work out, there's a few problems that just focus on the sales journal. There's some problems that just focus on the purchases journal and the cash and the accounts receivable, or cash receivable and cash payments journal. But then there's a problem at the end that puts everything together. And so that's the problem where you're really going to have to look at which journal do these go into? What are we doing? I think specialized journals make life easier because everything from the specific kind of transaction goes into one journal. A lot of times when we get into QuickBooks and some of those things, you will have just put a journal, you'll just put the transaction in, and it will actually put it in a separate journal. So you can pull up accounts receivable journal and know what's everything is receivable. And that's the nice thing, is it does it for us, but we have to go to the right area for it to do that for us. We'd have to go to the accounts receivable part to do that, saying that someone paid us money, that we received money. Could be received cash, and we have to go in there and figure out how to do that. So this brings it more into some of that area. There's also the Dality in what we have been doing with general ledgers. Some businesses really enjoy that. And in QuickBooks, you can just go and print out your general journal, and it'll print out all of your transactions and stuff that you have. So you kind of get both sides of it there. Let me know if you have any questions. You have 2 weeks to work on this, and hope you have a great day.